Greetings and welcome back to the channel. Andrew May here, investment advisor and certified financial planner professional, bringing you more real-world strategies designed to assist you in navigating your personal financial life. How would you go about investing a large lump sum of money into your investment portfolio? Say $100,000, $500,000, or maybe even $1 million. Would you invest all of it at once, or are there other approaches worthy of your consideration? Well, stay tuned and watch today's video because these are just some of the questions that I will be addressing. But before we jump into the content, if learning more about personal finance and investing is something that you're interested in, then be sure to hit the like button and subscribe to the channel. In today's video, I will be offering an alternative strategy for investing a large lump sum of money into a well-diversified portfolio, one that may be managed using my favorite strategy, strategic asset allocation. Let's say that you came into a large lump sum of money. Perhaps it was from an inheritance or from selling a home, a piece of real estate, or liquidating a large holding in an individual stock. Your options for investing these monies include investing them all at the same time or choosing to dollar cost average the monies into your portfolio over an extended period of time. Dollar cost averaging is a risk mitigation strategy, not necessarily a performance maximization strategy, meaning dollar cost averaging may not produce greater returns than putting all the monies into the portfolio at one time. The strategy that proves to be the most profitable will depend upon the performance of the global financial markets. That is something that is unpredictable, especially in the short term. Dollar cost averaging does help ensure that new monies are not invested at a temporary market high, where the investor is forced to endure a market correction or a bear market shortly after making such a substantial investment. This strategy is designed to help an investor deploy a large sum of money into a well-diversified portfolio without having to concern themselves with the timing of the contribution. Dollar cost averaging into a portfolio will potentially be more beneficial the more volatile one's portfolio is, or the greater one's allocation to stocks. If one's portfolio is largely allocated to fixed income securities and bonds, the less volatile their portfolio will be, and hence the less effective this strategy may be. As an example, if you were to inherit $1 million, rather than investing the entire amount into a globally diversified portfolio as a lump sum, you could choose to dollar cost average $50,000 a month into the portfolio over time until all the monies were invested. You could also decide to invest $100,000 a month until all the monies are invested. There is no one perfect way to dollar cost average into one's portfolio, merely options for an investor to consider. The most suitable one being the dollar amount the investor is comfortable investing each and every period, and the one that they can stick with until all the money is invested despite the performance of the financial markets. I would like to note that the dollar cost averaging strategy would not be warranted if an investor was simply redeploying funds that had previously been invested in a diversified portfolio. An example of this would be rolling over funds from a 401k into an IRA rollover. If the funds were invested while in the 401k, then I believe it is advisable to reinvest the funds as soon as possible in a diversified manner. The dollar cost averaging strategy is best suited for new monies that were not invested in a diversified manner. If you are a client of mine and would like to discuss your options for investing a large lump sum of money into a diversified portfolio, then I invite you to give me a call. If you found today's video informative, then be sure to hit the like button and subscribe to the channel. Also, if you know of anyone else who may benefit from the contents of this video, then consider doing that person a favor and sharing the video with them. Until next time, I'm Andrew May, investment advisor and certified financial planner professional, and I believe that by considering the strategy offered in today's video, you will be better prepared to do this.